This is Asia Trade. I'm Shery in Tokyo. The top stories this hour. Asia set for a choppy start after softer than expected U.S. inflation figures drove Wall Street higher despite a rout in chip stocks. Limited oil price fallout from the Iran war bolstering bets the Fed has room to delay hikes. Meanwhile, the Bank of Korea expected to raise rates today. The key question is how fast, how far, and how long Governor Shin's new tightening cycle will run. And we're live at the Aspen Security Forum speaking with IEA Executive Director Fatih Birol and U.S. Trade Representative Jamieson Greer.
I'm Haidi Stroud-Watts in Sydney. Take a look at the setup for trading across Asia. As Shery mentioned, lots of cross currents when it comes to what investors are contending with. Korea is front and centre for a number of reasons, not just the BOK. As Shery mentioned at the top, we are expecting the BOK to raise rates on higher inflation outlook, the growth outlook as well. It's a wide expectation when it comes to that raise to the policy rate. All 25 economists surveyed by us at Bloomberg expecting that 2.75% rate by the end of Thursday. So we're watching that. But there's also, of course, increasing concerns when it comes to the wild swings and volatility when it comes to Korean markets. Even the president of South Korea coming out and saying that the stock market is quite unstable. We are hearing some reports that there is a gathering and discussions taking place when it comes to various government entities as well as regulators on this issue of these leveraged ETFs. So watching that very closely. In the meantime, though, pretty choppy start is the picture as we look at a pretty mixed open there. This is the last trade when it comes to Chicago Nikkei futures modestly to the upside. South Korean futures, though, down by 4.5% there. We're also watching dollar yen at 162 level and watching the won as well, dependent on what we see out of the Bank of Korea. Take a look at the geopolitics story with the US launching fresh strikes on Iran. That sort of peril in the Strait of Hormuz and the complications of oil vessels traversing that area is really continuing to escalate there. That interim peace deal signed about a month ago, all but collapsing. We do have perhaps some sign of positivity. Just now, President Trump saying that Iran has released a US citizen. He's praised that as a goodwill gesture in a Truth Social post about this newly released US citizen by Iran. So we'll be watching that very closely as well. Oil. At the moment, we're seeing Brent crude 0.3% higher last trade. WTI putting on 1%, so climbing for that fourth day. All of this feeding into that inflation picture, right? But that softer than expected US inflation report, another reading strengthening the case for the Fed to hold. Bloomberg's Federal Reserve and economy reporter Enda Curran. Our MLive strategist Mark Cranfield joins us now with more. So Enda, let's start off with you. So we've got a couple of data points now that suggest that the Fed should be comfortable where it's at. Does that push out the expectations even beyond the end of the year now?
Well, it certainly was a good week on the inflation front, Heidi. As you mentioned there, we had producer prices coming in today, somewhat slower than expected. A lot of it was because of the energy story. We all know that now that feeds through to, logistics and transportation and airline fuel costs and all the rest of it. But also it was somewhat more broad-based, food costs coming down. So that's your upstream producer prices. That feeds into the Fed's preferred inflation gauge, suggesting that with consumer data, inflation data we had this week, now the producer prices, it does take pressure off the Fed, to your point. Certainly takes pressure off them for the July meeting. We had Fed Chairman Warsh speaking again today. He interestingly made the point that, yes, the AI boom is real, and yes, probably near term it's having an impact on prices. But he said that doesn't necessarily equate to broad-based or persistent inflation, hinting there perhaps at a willingness to look through what's happening with the AI boom here. So taking it all together, the numbers this week do not add up to the Fed moving in July. I think things will get a lot more complicated, though, in September and October, Heidi, when we start to get, a new round of inflation data, and that will be critical heading into the year end.
Yeah, Mark, very dangerous for markets to kind of fixate on this idea of, again, transitory energy inflation, right? Particularly at a time when we're seeing a re-escalation of the war with Iran. What's the pricing looking like at the moment in terms of expectations?
We haven't really changed a great deal. Traders are still skewed towards the idea that the Federal Reserve will raise interest rates at least once in the next few months, and that's not too surprising. Well, it's not just about the fact that WTI is back around the $80 mark, but if you look at the other products, things like the diesel fuels, jet fuels, those are much higher. There's shortages already appearing in the other oil stocks as well, which hit the direct economy. So people are reluctant to price out the idea that the Federal Reserve can't increase interest rates just because of what's happening across the energy sector. But if you're in the position of Kevin Warsh, he's probably going to tell the committee that they should take more time. They should deliberate further and not rush to any decisions. But it is a split FOMC. We've seen already this year that there have been people voting in favour for changes much earlier under Chairman Powell. So it's going to be a very hot meeting when they do come together, and markets will be looking for any split between the FOMC people, even if rates are held at the same level. But if looking ahead, traders aren't going to really push yields down very far when they can see what's happening in the real world. They can see that the Iran conflict is going on. There's plenty for them to see that the chances are that base inflation will stay relatively high. People are likely to be defensive in terms of bonds and currencies, at least.
Mark, when it came to Fed Chairman Warsh, it was interesting also that he doesn't necessarily see these one-time price hikes around artificial intelligence as inflationary. And yet, when it comes to the tech sector itself, really the volatility has been immense.
Yeah, I think he's being a little bit disingenuous there, because clearly the build-up of data centers, the huge amounts of money that hyperscalers are spending right now on the build-up of capacity to be able to produce AI products is clearly inflationary in the short term. There's so many reports about it. Bloomberg have written extensively. Investors can see that. They know it's pushing up prices in the near term. Further down the road, job destruction because of AI is a much more serious problem for the US economy and global economy. Jobs will be lost because AI can replace. That's a longer, medium to long-term picture. And that's probably why Kevin Warsh is trying to tread carefully between the now and the later scenarios. As far as investors are concerned, they're more interested in what happens over the next couple of months rather than further down the track. So that is why you're seeing partly the volatility in the big names in the tech sector, although some of that is already beginning to unwound today. It'll be a very interesting day in the Kospi today. We saw the SOX index fall but rebound late in the session. It's going to be a very choppy day. We've got TSMC earnings as well. There's still a huge amount going on, and we've got the big American names still to release over the next few days as well. This earnings season is very important for the equity market and for the short-term volatility. Once we get through it, we may well look back and say, actually, these companies are still making huge profits, and that gives some optimism for the next couple of months ahead in the equity markets.
And what's your take on the U.S. economy, especially since we also got the beige book? How are Americans feeling right now?
The economy is doing, fine in terms of aggregate data. It's interesting listening to the policymakers this week, including Governor Waller, Governor Lisa Cook today. I was at her speech. They're all making the point that they have flipped from worrying about the jobs market. Jobs market's doing fine. If you need a job, you can find a job. Unemployment is low. We haven't yet seen the flow through from the AI diffusion. It might be happening in some sectors like finance, for example, but not broadly speaking, which means the story here is all about inflation. And it's kind of a confusing story right now. It's whiplash. When that Iran peace deal was signed a few weeks ago, the story looked like one of relief in the months ahead, with the energy story coming off the boil, allowing policymakers to drill into what's going on with the AI inflation story. Tariffs are meant to be coming off the boil as well in terms of their impact. So the inflationary story looked like it could be easing heading into the sort of back end of the year. But now, of course, we're right back to where we started. The conflict is raging again with Iran. That's going to have consequences on oil. We know what's going on with diesel costs at the moment. That's going to have some flow through. The AI story has not gone away, even though, as Mark said, Chairman Warsh is saying it might be near term, we can look through that, but it's happening and it's real on the ground for anyone trying to buy RAM or memory or a laptop. And the tariff story hasn't gone away. It's still an issue and a talking point among companies. They still say that their costs are high as a result of the tariff impact. So the story in the US at the moment is not one of concern about growth per se, not one of concern about the labor market. It's about inflation. It's about how much will it accelerate from here into the year end? Can the Fed keep a grip on it? Can they not get it back to its target, but at least stop it accelerating from where it is? And that's very much an open question. And it's going to be a big test for Chairman Warsh heading into the second half of the year, given the political pressure that he's under.
Bloomberg's Enda Curran there joining us from DC, also our MLive strategist Mark Cranfield in Singapore. Still ahead, IEA Executive Director Fatih Birol joins us live from the Aspen Security Forum. We'll ask what recent attacks on the oil tankers could mean for shipping through the Strait of Hormuz and global energy supply.
They want to settle so badly. They don't like what we're doing. And they do want to settle. We'll find out whether or not we settle with them or we just finish it off.
Trump there reiterating claims that Iran is seeking more talks, even as the US says strikes will continue until Tehran stops attacking ships in the Strait of Hormuz. Well, as the world absorbs the shocks of conflict in the Middle East, energy security remains a key focus at the Aspen Security Forum. Bloomberg TV's David Gura joins us live now from Colorado with our next guest.
Yes, Dr. Fatih Birol is with me here in Aspen. Great to have you with us, he of the IEA. Let me start by just getting your sense of what's happening in and around the Strait of Hormuz. We've been watching the U.S. strikes, of course. We've seen the ceasefire dissolve, the memo of understanding thrown out. What have you observed over the last 24 hours of what's happening in the region?
Big uncertainty, and the markets are nervous whether or not there will be a soon and lasting solution to the problem. And at the same time, many countries are taking some measures to avoid the worst case scenario.
Talk about those measures. What are they doing exactly? We've seen them drawing from supplies, obviously, on an emergency basis over the course of this.
There is a few things. First, we see that some countries using their inventories, their stocks, such as China and some other countries, number one. Number two, we see that the production, oil production increases significantly from United States, from Brazil, or from Kazakhstan and elsewhere. Number three, it is noteworthy that the Saudi Arabia is making heroic efforts, as well as the United Arab Emirates, to through bypassing the Strait of Hormuz to bring the other cost of the region. All of them are good, but none of them are endless. Therefore, I hope the crisis will be solved quickly and in a convincing way. Otherwise, global economy may well hit some difficulties.
I hear you use the word hope, and I wonder how optimistic you are, indeed how worried you are about where we are now over the last 24 hours.
I am always worried. In fact, I have always thought, at the IEA, we always thought, what could happen if one day the Strait of Hormuz is closed.
You've thought through this many times.
Many times. We made some exercises and so on. And it is the reason, one of the reasons that we released a huge amount of stocks to the markets in a seamless way, which brought the oil prices $20 down. And now the problem is, once it is closed, many people think it may be closed again. So countries are now thinking not only what kind of measures they can take today, but how are they going to develop their energy strategies for tomorrow.
My understanding is the IEA has about 25% left of those reserves to release. Is there, what's the latest thinking on when you might have to deploy those again if this were to drag on?
So when we release our stocks, first of all, it was a historic 400 million barrels, which is equivalent to today, every day, almost 2.5 million barrels flowing to the markets, comforting the markets. And this was a historic, because never, ever we released so much stocks. And it was a unanimous decision, all of our member governments. And this was only 20% of the stocks we have. Still, I have the 80% in the pocket. If and when needed, our member countries, I am sure, will be happy to release those stocks. But I very much hope, again hope, that we will not come to that point.
Earlier this summer, you warned of oil getting into the red zone, as you put it. Are we there? Are we close to it? When will we know if we are?
So I was worried that end of July, and until the end of July, there will be no solution to the problem. I said, if the Hormuz Strait is not open end of July, when the travel season starts, which means the demand goes up, we may be entering the red zone for global economy. Thanks God, there was a ceasefire and some oil went through the Strait of Hormuz. It is good news. But if the current situation lasts longer and the Strait of Hormuz is quasi-closed, then we may again have some difficult days for the global economy, including those in the region, but also developing nations and in Asia. Asia is much more affected than the other countries in the rest of the world.
You mentioned you'd gamed all of this out, and I'm curious sort of how long, can you put a date on when, if this continues to X date, it'll be dramatically worse than it is now?
I cannot do that, but it is not months, it is weeks. I hope it will be solved, the problem, in a convincing way, that the Strait of Hormuz is fully open, unconditionally open, and I hope this happens within the weeks, in the next few weeks, I should say.
No doubt you've heard an amount of complacency surrounding all of this. The president often says, look, I was warned that oil prices might go up to $200 a barrel. They haven't. He takes that as an achievement. Should there be a level of complacency around that? The global economy was able to weather this, at least the initial strikes, better than many would have feared.
Now, when we went to this crisis, we had a lot of oil in the pocket, the surplus. We use that oil. We are using that oil. Plus, as I just mentioned, we released huge amount of stocks, oil stocks to the market. Historically, this is also good. Then US, Brazil, and these countries increased the production. And at the same time, Saudi and the Emirates made this rerouting the oil. But none of them are endless. So if the situation continues like this for a very long time, we may have serious difficulties in the global economy.
Have we seen countries beginning to replenish those supplies? As I look at the price of oil, is that perhaps impacted by them doing that, or there's still a level of caution where they're not yet doing that?
Some countries are doing, not everybody is doing, but what countries are doing is they are reviewing their energy strategies. They are drawing a lesson from this, and they understand that this is a dangerous world we are in, how they can have strategies better prepared for the next energy shock we may face. Let's remember that only 4 years ago, we had another energy shock after Russia invaded Ukraine. And when you look at the map, 4 years ago, there were two main arteries bringing energy to the world. One of them is from Russia, from Western Siberia to Europe, with pipelines. The other one is from through the Strait of Hormuz, Middle East, to Asia and the rest of the world. And both of these arteries are disrupted now. And therefore, countries are reviewing their energy strategies. And today, I talk with all the governments around the world, many government leaders. And the most scarce commodity in the energy world today is trust. People are looking at trusted partners to develop energy partnerships.
You've brought up infrastructure a few times, and we've seen floated in recent days a pipeline that could be reinvigorated from northern Iraq. How much should we be counting on that to equilibrate the situation? It would take time to build new pipelines. It would take time to put other ones online.
Now, the most advanced ones are what Emirates is expanding their pipeline, and the Saudi Arabia is expanding their pipelines to east-west pipelines. And here, even if they are finished on time, they will be only compensating 50% of the Strait of Hormuz. So there are many other countries who need to, at the moment, send their oil through the Strait of Hormuz. So we will be vulnerable to this issue for some time. And of course, there are many new projects. Iraq is one, again, Saudi, the Emirates, Kuwait, they have different projects, but it will take some time them to be realized. Also, consuming countries are also looking at other options in terms of the technologies, fuels, and trade routes.
How tight is the market right now when it comes to oil, when it comes to refined products? And as you look at this kind of on a regional basis, which regions do you think face the biggest risk of a squeeze right now?
Number one, Number 2 and number 3 is Asia. Asia, because before the crisis has started in Strait of Hormuz, 80 to 90% of the oil and gas of Asia came from this Strait of Hormuz. They are very vulnerable. I mean, of course, Japan is so, Korea is so, but mainly developing Asian countries such as Bangladesh, Pakistan, and India. These are vulnerable, but also Europe, for example. We don't talk much about Europe, but Europe is also a challenge of the products. Diesel is an issue, jet fuel is another issue, and with Russia being a major diesel exporter and the recently Ukraine attacks on Russian refineries made the situation a bit more difficult.
My last question is about demand, and you've talked about peak demand. The forecast is for demand to diminish some. Have we reached peak demand? Are we getting closer to peak demand? Where are we in that story?
Now, demand is, I mean, this year is not a normal year to have a judgment. There are many disruptions because of what's happening in the Strait of Hormuz and the prices. But when I look at globally, oil demand is still healthy. But in many parts of the world, electric cars are coming. Electrification transportation sector is coming, especially in Asia. Not only China, but Southeast Asia. This may have impact on the global oil demand growth patterns.
Great to speak with you. Thank you very much. That's Dr. Fatih Birol of the IEA joining me here in Aspen at the Aspen Security Forum in Shery. I'll send it back to you.
Thank you so much, David. David Gura there with the latest on the global energy markets, of course. And we'll have plenty more coming up from the Aspen Security Forum in Colorado as well. In the meantime, you're also watching, of course, the ongoing conflict between Iran and the U.S. We talked a little bit about the implications for the energy markets, but the U.S. Central Command now confirming that it launched a second wave of attacks on Iran on Wednesday. Iran's Revolutionary Guard Corps has vowed to keep the Strait of Hormuz closed until the U.S. ends strikes and its naval blockade. Let's bring in Bloomberg senior editor Derek Wallbank. And Derek, we're still seeing perhaps a little bit of progress with President Trump now saying that Iran has released a U.S. citizen as well. Where are we in these negotiations?
Well, we were at a fifth consecutive day of American attacks. We have a situation right now where the U.S.-Iran interim peace deal that was signed about a month ago is now basically collapsed at this point. You have attacks that are going on. You have counterattacks that are going on. But Donald Trump did in the last hour put out a very interesting statement on his Truth Social platform. He said that Iran had freed an American woman, did not name who that was, but said that she had been detained since December of 2024. He praised the Islamic Republic of Iran for what he called a, quote, gesture of goodwill. Something, you have to watch the tonalities here, right? We have shifted from bellicosity to talks about talks, and we keep going back and forth on there. And yes, it can seem dizzying at times, and you do see market gyrations, and you do see a certain, inoculation to going back and forth all the time, but you do really have to watch the sentiment on this in absence of, something more tangible. And the sentiment on this, as I say, in the last hour, there's a little bit of a window of an opening. What happens with that? Too early to say, but is that a window of an opening that can potentially be used to de-escalate? Who knows, maybe. I think it's very interesting, the comments from the prior guest talking about how the Strait of Hormuz is so key to this, not just in the short term, but in the medium term to all sorts of things we're seeing in the economy, rightfully pointing out that even if you're talking about infrastructure investments that are going on to try and dodge or get around in the long term, that's not going to do anything in the short term. And so this is going to be a pressure point in the immediate future until things ease.
The president has a lot on his mind lately, right? We're just about 4 months away from the midterms in Congress. Pretty interesting vote on Israel funding that's seeming to split the Democratic Party. We're also expecting Netanyahu to visit the U.S. over the weekend as well.
Yeah, Heidi, really interesting vote in Congress today, U.S. time. It was an amendment that was never going to pass, but the idea was to put Democrats on the record and expose the growing rift in that party. And the amendment basically would have said, let's cut U.S. aid to Israel starting the next fiscal year. Now, more Democrats voted for that than didn't. And this follows a couple of key primary campaigns, primary elections that we've seen where Democratic members lost their seats or were prevented from winning seats in Colorado, in New York. And so we're seeing here Israel starting to be a wedge issue in the Democratic base, and it's not cleanly. Israel has counted on bipartisan support from Democrats and Republicans for a long time. You can see a growing breaking of ranks on the left. It's going to be something to watch.
Bloomberg senior editor Derek Wallbank there. And in the next hour, we'll be speaking exclusively with the U.S. Trade Representative Ambassador Jamieson Greer on the issues shaping Washington's policy agenda. That's from the Aspen Security Forum in Colorado. This is Bloomberg.
And we're setting up for the market opens across Asia. And Haidi, we're watching, of course, what's happening around the inflation picture in the U.S. as well, given that we had some potentially more positive sentiment around those inflation numbers, whether it was CPI yesterday, where we actually saw the first decline since 2020, or PPI just last night, also surprising lower. But the thing is that energy did most of the work here, right? Gasoline fell about 12%, pulling down the headline price, and transportation costs when it comes to PPI. The latest from June. So we're watching what happens to oil prices, given, of course, the ongoing tensions between Iran and the U.S. And the fact remains, Heidi, that we don't know where this is headed, right? I mean, we are hearing more positive, upbeat sentiment coming from the president that Iran has released a U.S. citizen, but at the same time, not necessarily any progress on the negotiations themselves.
Exactly. We don't know. That really underscores the conundrum that investors, that economists, that just about everyone is really in at the moment in terms of trying to model expectations for inflation, expectations for energy security, right? We just spoke with the IEA's Fatih Birol saying that the Strait of Hormuz must reopen within weeks to avoid a crisis. We don't know how that transit is going to look. We know that the US president threatened that 20% toll before refraining from making that threat again, but that just adds that extra element of uncertainty in already a very tenuous situation. And as you can see there, we continue to see now a fourth day of gains when it comes to New York traded crude there, 0.7% higher for WTI. This coming after we saw crude prices essentially erasing that wartime premium that we'd been building since at the end of February, but we're sort of back in that space again. When it comes to broader equities, it's also the tech and the AI story as well, right? The Nikkei 225, this is the picture as we head into what is likely to be a pretty choppy day of trade, particularly when it comes to Korea. We have not just the Bank of Korea decision. That's kind of a little bit more cut and dried when it comes to what we're expecting from the BOK. But really beyond monetary policy, we are watching to see what that kind of impact of the broader volatility for these equity markets are. We've had the South Korean president commenting on that volatility and expectations that more conversations at the high end of government, of regulation, is going to take place on these leveraged funds. Markets very closely watching for earnings from two of Nvidia's key suppliers. TSMC set to report later on Thursday. Our chief North Asia correspondent Stephen Engel joins us now from Taipei. So TSMC's numbers, what are we looking out for?
Well, what we're really looking out for is the capital expenditure outlook for this year and into next for TSMC. Also, of course, ASML, which makes the big lithography equipments, the EUV, the extreme ultraviolet lithography machines. So they were out. They gave some good guidance for the industry. And really, I think the tech industry and investors, nervous ones, especially in the chip sector, looking at these two companies for projected outlays for spending amid, of course, what some would say is a bit of a bubble in that kind of spending. But all indications are right now that maybe this is going to help put a floor on some of that sinking sentiment. We'll have to see when we get those results coming out later today. And also, we'll be speaking to the CFO of TSMC later tomorrow, Wendell Huang. But essentially, the ASML numbers were quite interesting because it raised its full year sales outlook for this year for a second time already this year. They're also talking talking about, the ability to add upwards of 30% capacity of those machines up to 85. And then the big number is potentially for 2028, there could be another 30% increase to take that number up to 110. And the senior management at ASML saying they're going to have to significantly look at that, investigate that if the demand is holding up. So these two numbers, what we got overnight from ASML, which was good signs, but a bit of a tepid response on the markets, and then TSMC perhaps is the big one.
Yeah, tepid is right. The bar is pretty high, even as we see this sort of extraordinary AI build-out,
yes.
right? So given the outlook, though, for ASML, could we actually see TSMC increase spending beyond even previous guidance?
Yeah, well, that previous guidance was for a near record outlays this year of $56 billion. But UBS, for one, is saying, given the demand out there right now, there could be a number released upwards of $60 billion. So that is something that we're going to be looking quite closely at. Also, of course, we got those storm-delayed sales figures for the second quarter on Monday, which saw a 36% rise in sales at TSMC, including a 68% jump in June alone. So that's a good harbinger for the revenue side. We'll have to see, though, if margins are being squeezed, though, as they increase ramp up of production of 2-nanometer technology, N2, as well as their expansions overseas, most specifically in the United States, in Arizona.
So other than capex, what else are you looking at?
Well, we're looking at, because the AI demand is keeping up. It's more than compensating for demand weakness in Android smartphones as well as PCs. So any kind of outlook from them on those sides and whether the AI spend is more than enough to offset that. Here's BI's take. I just want to read this very quickly. June sales reinforce our view that AI and server processor demand will comfortably offset smartphone and PC weakness, strengthening the case for price increases that should lift gross margin outlook. So again, is that the side of the business that's going to carry the way, or will we get any glimmer of hope on the PC and smartphones, which right now have given no indication that they are going to be turning things around anytime soon? Another big question, too, I want to go back to ASML. The information was reporting that pricing power, ASML might have that in their EUV machines. That's something we're going to be watching out for with TSMC, because one of the biggest customers, if not the biggest, of those lithography machines. And already we're getting indications that TSMC would push back against any increase in prices by ASML.
Stephen Engel there joining us from Taipei. He's our chief North Asia correspondent, and he'll bring you really more coverage of TSMC, including speaking to the CFO, Wendell Huang. And if you're in Asia, you can catch that interview on Monday. We also have heard from Nvidia founder Jensen Huang saying that his company's next generation AI accelerator systems are in production and on track for delivery to customers. He was responding to reports that manufacturing snags may delay its rollout.
Not true.
Are you still on track? Can you confirm
we're on
that?
track. Completely on track. Not true.
Okay, so Taiwan has chip supply chain.
Yeah, Vera Rubin's already in production.
Okay.
Yeah, giant amounts of production coming.
Jensen Huang speaking there during a visit to Japan to talk about how Nvidia might aid the country's sovereign and physical AI ambitions. For more, let's bring in senior tech editor Nick Turner. And Nick, we saw the market reaction with the tech sell-off when we got that semi-analysis report earlier this month. How much is at stake when it comes to the Vera Rubin?
Yeah, well, this is obviously their flagship product. This is the latest generation. It's supposed to start being delivered essentially this quarter and ramping up production in the fourth quarter. So everybody's really in kind of this wait and see mode to see whether production goes as smoothly as everyone hopes. And any signs that maybe things aren't going smoothly are really sort of elevated and people scrutinize it. Obviously, what the CEO said today was things seem to be fine, volume is going to be big, and we're doing great. So that's kind of the latest news on this.
How consequential is it for the rest of the industry?
I mean, certainly very consequential for what we call the hyperscalers, which are the biggest data center operators in terms of they want access to these chips. They want the fastest chips they can get. Certainly Nvidia remains the gold standard on that front. Those companies also are trying to find sourcing elsewhere, whether it's sort of making in-house chips or relying on AMD or some of the other companies. So certainly any delays might play out in the sense of increasing the urgency to find alternative sources of AI accelerators. But we're still in a mode now where people want as much NVIDIA chips as they can get.
And Nick, when it comes to Jensen Huang being here in Japan, this is a country, of course, that very much focuses on engineering, also advanced robotics. How do robots fit into NVIDIA's strategy?
Yeah, I mean, NVIDIA has been talking up robots, well, for years, but they've really started to kind of intensify that discussion this year. They're working on a lot of both chips and hardware and software that can make robots safer and more practical. And you saw an announcement today with Toyota where they're really working together on a number of things, but certainly robots are going to play into that partnership. And in Japan, robots are about as important as they are maybe anywhere in the world, given their use in manufacturing and the aging population and the need for potentially robotic help on that front. So it's an important place to be making those announcements.
Yeah, we'll be following Jensen Huang's trip here in Japan. Nick Turner, senior tech editor there, and you can get more on the biggest and most exciting tech stories on the Bloomberg Video Hub. You can also check out past episodes of Bloomberg Tech Asia and other shows on Bloomberg.com/videos. This is Bloomberg.
I'm really quite bullish, assuming the economy and the backdrop continues to be favorable, that in this period of regulatory normalization and given the pent-up element of this thing, that we are going to see continued M&A activity with good companies looking to get better by adding or purifying.
Morgan Stanley's chief, Ted Pick, speaking there about the outlook for M&A. His bank and its Wall Street peers have been raking in fees from advising on deals. Morgan Stanley also had a blowout quarter, hauling in $148 billion of net new assets in its wealth management business in the second quarter. Over half of that was tied to IPOs, including, of course, SpaceX's record-breaking listing. For more, Bloomberg Intelligence US financials analyst Neil Saps joins us now. So, Neil, take us through these numbers. How much of an anomaly quarter was it, particularly with something like SpaceX?
Yeah, I think there's no doubt that SpaceX was a pretty significant benefit across a franchise like Morgan Stanley and across the other largest U.S. competitors that have reported over the past 2 days. I think what we learned from results is the capital markets expectations and the hype, if you will, around that business really funneled through in the second quarter. We had blowout numbers in equities trading. Investment banking fees were really strong across all of the lines, including, of course, IPOs. And I think what's encouraging to see is, most of the management teams have been talking about pipelines being full, and most notably, Goldman Sachs, who posted the best fees since the record year of 2021, talked about actually an increase in the investment banking backlog, even in spite of the strong second quarter. So it seems like perhaps better days ahead in the second half.
We also saw some fruit being born when it comes to the strategy for BlackRock and Larry Fink.
Yeah, and I think when we look at BlackRock, right, I think it's a story of massive scale now, 15 trillion in managed assets. And what's most impressive about the story here and what investors were cheering today was, the growth continues to be just as impressive, if not, frankly, more impressive at the scale that they are today, particularly when we look at the organic base fee growth figures, which are running above the 5% target that BlackRock has earmarked. And essentially what that means is the new dollars that are coming onto BlackRock's platform, they're coming at higher fee categories. When we think about BlackRock, it's very synonymous with the iShares and typically low-fee ETFs and index funds, but BlackRock has transformed its growth into those higher fee buckets, particularly in the private market space. So I think that the quality of growth for BlackRock has increasingly improved over the past couple of quarters.
Bloomberg Intelligence U.S. financial analyst Neil Sipes there. And Bank of America's chairman and CEO Brian Moynihan will be joining Bloomberg Surveillance later today. The conversation will be focused on his company's blowout quarterly performance and outlook for the rest of the year as well. And we're also hearing from JP Morgan CEO Jamie Dimon warning about the risk of making a sophisticated AI system like Anthropic's Mythos model widely available, comparing it to a ballistic missile. Rapid advancements in AI have both businesses and government assessing potential threats. The issue took on more urgency after Anthropic said its Mythos model is so good at finding software vulnerabilities that it cannot be released to the general public.
Mythos, that's a real issue, which I know our government is on top of at this point. It's not to stop small banks from gaining it. So it's really just to make sure we roll out this stuff that we know is being controlled, because you're giving ballistic missiles to individuals with Mythos, basically.
And we've been told that Anthropic is seeking to meet with investors ahead of its potential mega IPO. Sources say banks leading the offering are scheduling meetings between investors and the company in the coming weeks. Bloomberg earlier reported that Anthropic is considering an IPO as soon as October, putting it ahead of rival OpenAI's potential listing in 2027. Apple has received long-awaited government approvals to roll out Apple Intelligence in China. On Wednesday, China's Cyberspace Administration included Apple's generative AI on a list of newly approved providers. This could give the iPhone maker a boost in the world's most competitive smartphone market. The Chinese version of Apple Intelligence includes technology from Alibaba and Baidu. We have more ahead on the Asia trade. This is Bloomberg.
Our domestic stock market is quite unstable. In fact, we've experienced a historically unprecedented surge in a very short period of time. So, it would require time and fluctuation for the market to stabilize.
That was South Korean President Lee Jae-myung on the stock market's wild swings. Of course, we have seen the volatility when it comes to the Kospi, and not to mention the SK Hynix Samsung stock that make up more than half of the Kospi itself. You can see the Korean won continuing to weaken right now. We saw a little bit of strength given the expectation that we would see those SK Hynix ADR-related flows back into the South Korean economy. We're past that 1500 level, but a little bit of weakness against the greenback in today's session. Not to mention that we're seeing that downside in the future space. SK Hynix also potentially losing 6%. We had, of course, already seen the best day in the Kospi in about a month, and the Korean won also trading at around the highs that we haven't seen in about 2 months. And all of this coming at a time when it's Bank of Korea Day. Bloomberg Economics says the AI-driven chip boom, resilient growth, and persistent inflation give the BOK room to raise rates by 25 basis points today. As Korea economist Hyo Kwon joins us now with more on this, and it seems that that hike is already priced in by the markets. Hyo-sung, so what will you be watching today?
Shery, as you mentioned that that hike today is largely expected, but the bigger question is how fast and how far the BOK will raise interest rate and how long it will maintain the high interest rate in the restrictive area. So my view is that BOK will take a gradual steps. So it will raise interest rate 25 basis points in every quarter until the first half of next year. So it will take the terminal rate, the base rate to 3.5% from 2.5% now. But it will highly hinge on the strength and the persistency of the chip cycle.
What about the chips market volatility? Because we're seeing a lot of it when it comes to the stock markets. Will that have an implication for the BOK?
I think it has two aspects. The high volatility in the Kospi stock market is related to the leverage investment. So the margin debt in the Kospi market is at a historically high level. And at the same time, the single stock leveraged ETF launched in May is amplifying the volatility. So it is related to financial imbalances. The BOK will tighten policy to lean against the wind. At the same time, higher volatility means that the BOK policymakers doesn't want to add another layer of volatility by raising interest rate rapidly or with a jumbo hike. So the good compromise will be a gradual tightening cycle.
We know that South Korea right now has a little bit of leeway when it comes to the growth side, right? I mean, GDP expectations have been upgraded even by the government. How about the fact, though, that we're seeing perhaps more inequality in the economy, this K-shaped recovery of South Korea? Does that give pause to the BOK?
Yeah, I think, that as you mentioned, that the growth is expected to rise this year, mainly driven by the chip sector. And beyond chip sector, many sectors are actually struggling. Think about the self-employed, and the construction sector continues to decline. But BOK, this will give a BOK a very difficult challenge. But at the same time, I think BOK might prefer a division of labor with the fiscal policy. So what I think is that BOK would like to communicate with the government that so expansionary fiscal policy will address the distributional problem, and then BOK monetary policy will deal with the aggregate variables such as growth, inflation, and financial stability.
Bloomberg Economics career economist Huang there, and we do have that BOK decision over the next hour. And of course, no great surprises expected when it comes to the start of this hiking cycle. Certainly a great deal of uncertainty from the oil price outlook to what's going on when it comes to the AI economy and the leverage that we're seeing in some of those trades there. Choppy session being set up as we'd head towards just minutes away the open of some of these major markets. We do have Sydney looking like we'll see sort of one of the rare bright spots. Energy stocks, of course, continuing to benefit, and oil continues to climb higher for a full straight session with more US strikes, despite a little bit of a softening in the tone from the most recent social media post from President Trump. Nikkei futures looking like this, 2% lower there, just about, and Seoul Kospi futures up by 5%. We're also expecting potentially some conversations to be held in the upper echelons of regulators of the government, the finance ministry, to talk about the impact of some of these ETFs that have been at the core of the volatility and the rotation and swings that have been taking place in Korean markets. In the next hour, some great conversations coming up too. We'll be speaking exclusively with the US Trade Representative Jamieson Greer on the issues shaping Washington's policy agenda. That's coming to us live from the Aspen Security Forum in Colorado. In the meantime, we're headed towards the market opens in Sydney, Seoul and Tokyo next. This is Bloomberg.
This is the Asia Trade. We're counting down to Asia's major market opens. We're watching the U.S. continue airstrikes against Iran, not to mention Haidi, that we're seeing the AI trade still pretty volatile. Two themes that will be very important for South Korea as they gauge inflationary pressures, as they gauge the volatility around semiconductors on this Bank of Korea decision day.
Yeah, I love that the Bank of Korea decision is almost the least dramatic of today's events that we're watching out for, right? But you're absolutely right. It is that rotation in and out of tech, the volatility, and so much of that volatility, as you know, Shery, is being derived by these single stock ETFs, SK Hynix, Samsung. We are expecting that regulators and financial regulators and the government might be thinking about doing something about that.
Yeah, anything related to semiconductors, the AI trade, also very important for Japan, as we have Nvidia's Jensen Huang here in the country announcing partnerships with companies such as Kawasaki, for example, according to local media. So we'll be following some of the latest developments around the tech sector here in the country, as well as the Nikkei is now down more than 1% at the moment. Watch those tech stocks, watch the Japanese yen, really not doing much and still staying at that 162 level against the US dollar. We're seeing a little bit of that whole repatriation theme, the GPIF, the pension fund investment theme, fading a little bit. Remember, we had seen the government calling out for more domestic investments, perhaps even pension funds reallocating their portfolios. So a lot of that had given some rise to optimism here in Japan. But we're seeing the downside broadly across markets and assets here today. Take a look at how South Korea is trading as well. Of course, a market heavily dependent on the tech sector, heavily dependent on oil from the Middle East as well, on a day where we have the Bank of Korea rate decision. But as Haidi alluded to, perhaps no fireworks this time around. All economists surveyed by Bloomberg expecting a rate hike today. All to do with the huge boom that we're seeing from the semiconductor trade. We're seeing growth forecast for the country being upgraded, both from the government, private analysts as well. The Korean won, though, still continues to be a little bit pressured against the greenback. It's seen a little bit of strength, so we're trading around 2-month highs against the US dollar because of expectations of perhaps repatriation of funds coming from SK Hynix ADR listings, more domestic investments. But the Kospi right now losing more than 4%. But remember, Haidi, very, very volatile market, as you said. I mean, the Kospi is just coming off its best day in months, and now we're again seeing a drop of almost 5%.
We could really see further losses, right, particularly if more details come as to what the government is planning to do on these single stock leveraged ETFs. We're expecting soon measures to be announced now, according to the Financial Services Commission head, speaking in a YouTube program, saying that close consultations are underway with the so-called F4, the Finance Ministry, the BOK, FSC, and the Financial Supervisory Service there. Watching that, but also, of course, watching the geopolitical situation as well. As Shery mentioned, that inflation picture looking ever murkier, with Brent continuing to climb, oil prices higher for a 4th consecutive day. These airstrikes continuing, a little bit of a softening in the tone from President Trump in the last sort of Truth Social messaging about the released US prisoner from Iran, but still so much uncertainty going forward. We do know that energy stocks continue to benefit, as we can see with trading getting underway here in Australia. Well, Bloomberg sources say White House and US trade representative staffers believe that China is not living up to the Trump administration's understanding of last year's trade deal. However, our sources also indicated that the US isn't going to do much about it. Bloomberg TV's David Gura joins us now again from Colorado with more.
Thank you very much. I'm here with Ambassador Jamieson Greer here on the sidelines of the Aspen Security Forum. Great to have you with us. And you were just on a panel and you said you have an aversion to making news. I'm going to try nonetheless. I think there are a lot of folks wondering about Brazil in particular, seen as this test case for the Section 301 tariffs. Statutory deadline is today. Anything that you can say about the process and where it stands and what we can expect?
Yeah, it's today. So our Section 301 investigations, they are legal investigations. We have 2 sets of hearings. We do 2 sets of public comments. And we're focused on unfair trading practices by Brazil. So we have to have a legal basis to do this. And there are all kinds of things that Brazil has been doing. They've been censoring our digital tech companies. They've been restricting our access for ethanol to their market. They've been actually engaging in illegal deforestation in the Amazon, which gives them a leg up on all the ag, where they displace our ag exports to third countries. So there are a lot of things like this that have been a problem for a long time with Brazil. So we've been investigating this. Today we'll announce our final action. I had a video conversation with my counterpart in Brazil last night. Very cordial. We've had intensive negotiations with them. I think there's still a lot of gaps between us, so we probably have to have some kind of action, but then continued discussions, I think.
Expectation 25%? In line with what you're thinking in terms of the range?
Well, this is what was proposed by my office at the president's direction. So this is probably what we're looking at. Again, I don't want to get ahead of the president. He's signing something today. I just got off the phone with him, and so we'll have more details to come. But again, I just want to emphasize these are unfair trading practices that Brazil has had in place against American exporters and workers for many years. The president is trying to resolve these, and we're doing it by negotiation, where we need to use leverage of tariffs. That's what we're allowed to do with Section 301. We'll do that where it's necessary.
I'll ask you about Vietnam as well. I understand representatives of Vietnam have been in Washington meeting with your staff. Any update that you can give us on the status of those negotiations?
Yes. So we have Vietnamese officials in Washington this week negotiating. With all of the trade deals we've done over the past year and a half, all of them have had some core issues. Obviously, tariffs. We want other countries to take down their tariffs. Non-tariff barriers, where they restrict U.S. exports of goods and services. Also things like economic security, where if we're going to be shipping them some of our high-tech equipment, they need to align with us on export controls and other things. So this is something we expect from the Vietnamese. And then there are things like just basic standards of intellectual property and other things, the type of things that the rules that our companies abide by, we want them to do so as well. So I have a separate investigation with Vietnam involving intellectual property because they've been a bad actor in this space. So these are the types of things, intellectual property, economic security, where we still have open areas of discussion.
Switzerland's top trade diplomat told Bloomberg there's a good chance they'll get to a 15% deal, something stable. Can you confirm that negotiations with Switzerland are going well?
Well, I know that that's what they want. I know that is the substance of a framework agreement we agreed to a few months ago. One interesting thing with Switzerland, we've been very concerned with our trade deficit with Switzerland, but over the past 6 to 7 months, the United States is now in surplus with Switzerland in goods. So that's a really positive development. The Swiss are investing here in America. In fact, this week I'm going to visit a plant in Utah where they are producing railway equipment. It's a Swiss company. They're coming here. They're bringing their apprenticeship program. So the Swiss are doing a lot of the things they need to do to get right with the U.S. Negotiations are still ongoing, so I can't guarantee anything, but there's positive direction there.
I'll ask you about this sanctions bill, newly elevated after the passing of Senator Lindsey Graham. Senator Richard Blumenthal said you've been involved in conversations about that. Is it in a place now that you and the White House are happy with?
So there are a lot of elements to this bill. There's a tariff element, there's a sanctions element, all of which are designed to give the president discretion to deploy pressure on Russia and those who are supporting Russia. So we've worked very constructively with the Senate on this. There are a lot of good things to be said about it. I just spoke with the president about it as well. So I think there's an openness there. I think we'll see within the next couple of days, final views from the president on whether he wants to be supportive. I think that we have it in a pretty good place. I think it's meaningful that this is something that Senator Graham and I and Senator Blumenthal and others were working on up until his last days, and that's meaningful as well.
It would give the president the latitude to impose tariffs of up to 100%, as I understand it, on the largest importers of Russian oil. Any indication from him if he's prepared to do that should this be passed?
Well, I think, when I talk to the president about this kind of issue, he wants to be careful about the way he deploys this kind of leverage. Geopolitics are very fragile, and this is something, whether it's a tariff action or sanctions action or anything, it's something that the president thinks about very carefully. He certainly talks to me. He talks to Secretary Bessent, Secretary Rubio, Secretary Lutnick. He talks to everybody. He talks to people outside the government. He wants to hit the right spot of putting pressure on countries and putting pressure on Russia without creating more conflict or reducing the likelihood of a peace deal.
The Section 122 tariff set to expire in just a couple of days, really a few days from now.
July 24th.
July 24th. All but certain that the 301 tariff is going to affect after that, or are we looking at perhaps a lapse kind of in coverage?
The reality is the Section 301 investigations I'm doing where we've proposed some tariffs, they're on their own track. We're moving quickly, deliberately, because we want to resolve the unfair trading practices that we're targeting with these investigations. So we're going to do them as soon as we can to get at these practices. Whether they're day before, day of, day after, that's less important to us than making sure we're addressing these unfair trading practices and getting the leverage in place we need to resolve them.
Do you have a timetable for when you're going to bring that report to the president, when you might see them enacted?
Well, we have a couple, right?
Yeah.
So we have a Section 301 on forced labor, targeting countries who don't ban the import of forced labor goods. We do in America, other countries don't. Some have a law, but they don't necessarily enforce it. So we already have our report out on that, and so we can take action, I think, fairly quickly on that within the next few weeks. We have another investigation that's targeting a more compact group of countries on structural excess capacity. These are countries who typically have a big trade deficit with the world, or a big trade surplus with the world, or a big trade surplus with us, or even if they don't, they may have practices that generate, factories or production that are totally out of whack with global demand. So this is a quite intense project. I have dozens and dozens of attorneys and policy makers working on this to really examine all of these practices. So it takes a little longer time than doing this forced labor one, which is a little bit of a binary where you're looking at what do they have in place and are they enforcing it. This is more complex.
Does that explain the delay entirely, or how long it's taking, or if there's been reports that maybe the China issue is complicating it more than it is with the others?
No, I don't think that's the case at all, right? I mean, China is included in this structural excess capacity, Section 301. The reality is it's a more complex investigation, and we have to make sure that we are hitting our milestones. We've received a lot of comments from the public. We have to analyze those. We have to incorporate them into any responsive action we might take. So we're trying to make sure that we're actually living up to the letter of the law and the spirit of the law. We want to make sure that we're targeting these, these unfair trading practices that have led to, frankly, offshoring in the U.S. and an inability to build new factories at times. When you have other countries that are building factories or they're depressing demand in their own country, this is not how market economics are supposed to work. And it creates a situation where there's not enough incentive to build a new factory in America or to employ American workers because we have overcapacity elsewhere. So we want to make sure that capacity is restricted, or that we mitigate it somehow in our own economy so we can have market incentives to build here and to make here.
I want to ask you about rare earths, and I wonder how you would assess China's performance when it comes to rare earths. And as we get closer to October, do you anticipate that agreement will be renewed in due course?
So China's compliance with the rare earth elements of our agreements, it's not perfect. I think everyone knows that. You can read that in the paper. That being said, we are getting a flow of rare earths. We don't have factories shutting down because they don't have it. But again, we really want to be in a position where we were, in 2024 and 2023 in President Trump's first term, where we had a regular flow of rare earths. We also know that the Chinese, they use rare earths for economic coercion. They did it in 2010 and 2011. They're doing it now, so it's not necessarily surprising. But we're continuing to have some flow, and where we have gaps, where we have problems, the Secretary of the Treasury and I, we work with our counterpart in China to try to loosen that flow up. Sometimes we're more successful than others. One important thing is we're moving forward in the U.S. on rare earth production. One of the things I'm doing on my trip out west here, I'm going to Utah to visit a facility where they've discovered rare earths in the Utah desert, and they're refining them and further manufacturing them at a facility in Utah, which is a great development for U.S. national and economic security.
You've got rare earths. There's huge pharmaceutical dependence as well. And I wonder how you're thinking about that, the way that you can kind of curb our reliance on Chinese pharmaceuticals and ingredients.
Yeah, we think about this a lot. This is really critical, because at the end of the day, if somehow you lose access to Chinese inputs, it can be a huge challenge for our own manufacturing base. And some people will say, well, what about India? Fine, but a lot of the inputs that India uses also come from China. One great thing that we're seeing as we try to encourage companies to reshore is we actually have commitments from 17 pharmaceutical companies, the largest and the most major pharmaceutical companies, not only to lower prices of medication here in the U.S. Pharmaceutical prices have gone down by 2.5%. But they've also agreed to reshore here and to manufacture here. And so we have companies like Eli Lilly and Novartis and others actually pouring concrete and superstructures going up in new facilities in North Carolina and Indiana and Southern California. So this actually, for me, has been a really bright spot of our efforts to reshore critical production in America.
In the trade reps glossary, transshipments is a word. And
yes. Yes.
I'm wondering how you are thinking about monitoring and blocking transshipment when it comes to China.
So it is a word in our glossary, but it can mean different things, right? There's kind of like your pure illegal transshipment where something's made in China, they send it to Vietnam, and they put a made in Vietnam sticker and send it over. It's just illegal, right? And that's on Customs and Border Protection to enforce that, right? To do investigations, to identify areas of fraud and go after it. And we're doing that. A day or two ago, we had a big announcement with DOJ teaming up with CBP. They've already found $1 billion in customs fraud, and some of that is transshipment. And then you have another issue where you have, it's often Asian inputs, China, Vietnam. They go to a third country, maybe Mexico, and they do just enough work where they can legally say, this is actually from Mexico, so maybe we should get a better tariff rate than if it were from China. That's an issue, and that's a problem. With Mexico, right now, for example, in some of our discussions, we're talking about rules of origin and saying if you want to get a better deal bringing something in from Mexico or name your country, you have to make sure it actually has U.S. content. You have to make sure it actually has Mexican content or whatever it is, and you have to have that as high as possible to protect against this other type of transshipment, which is a little more difficult to detect.
Last question here, and you're going to have to tell me how you triage your schedule and look at all of these deadlines. But, there's a long way to go until this meeting in September when the Chinese president comes to the United States. But let me ask you lastly sort of how you're thinking about that. You were so integral to the conversations that took place in Beijing. What are you expecting, deliverables-wise, to come out of that meeting in Washington in a couple months?
Well, the number one deliverable we always have between President Trump and President Xi is to continue the stability of the relationship. Both of these leaders are very committed to having a strong and solid personal relationship. Now, that doesn't mean we don't have issues in the broader relationship. Obviously, we do. China is a big challenge for the U.S. in a lot of ways. But we want to make sure we're delivering stability. There's never been a situation where the U.S. side or even the Chinese side has gone out and said everyone should expect a comprehensive agreement that resolves all issues. Like, no one's ever promised that, so that's not what we expect. We will have an opportunity to take stock of Chinese commitments with respect to purchases of soybeans and other agricultural products. We'll take stock on the rare earth issues we decided. So I think it'll be a moment for stock taking, confirming the relationship, making sure that China's complying with what it's agreed to do. That's really what we're looking forward to in this meeting.
Ambassador Greer, thank you very much. Appreciate the time. That's Ambassador Jamieson Greer joining me here in Aspen, Colorado. Shery, I'll send it back to you.
Yeah, and our thanks to Bloomberg TV's David Gura, as well as we continue to look ahead to that U.S.-China summit again. More ahead, this is Bloomberg.
Take a look at the big move that we're seeing in Korean assets at the moment. This volatility that we've seen increasingly build as a result of this leveraged AI ETF trade, the single stock trade that I should say has really sort of come to a head. We're seeing downside of 5.5% at the moment. This on expectations that South Korea will soon announce measures regarding the controversy over some of these leveraged ETF vehicles that are linked to the likes of SK Hynix, to Samsung Electronics in their contribution to stock market volatility. The Financial Services Commission head making these statements on YouTube, saying that these close consultations are underway with the so-called F4, the Bank of Korea, the FSC, the Financial Supervisory Service, as well as the finance ministries to protect investors and ensure market stability. We're expecting that announcement. They're reviewing the matter comprehensively. Wasn't really commenting as to whether we could see a temporary trading halt for these leveraged ETFs linked to Samsung and SK Hynix, but clearly that is one concern. But to give you an indication indication of what sort of premium we're talking about. The ADRs for SK Hynix over its South Korean shares at the moment soaring to more than 50% just 3 days after that trading debut. So you can see that fear playing out when it comes to the Kospi at the moment. The won not doing very much, of course, almost as an afterthought. We do have that BOK decision as well to look ahead to at some point this hour. Joining us now is Suresh, who's a head of CIO of Asia Equity Strategy at UBS Global Wealth Management. Suresh, really great to have you with us. Where to next for these Korean markets if we do see some resolute steps being taken by authorities when it comes to these leveraged ETFs with the single stocks?
I think it's quite natural that after a 100% rally, you tend to see some sort of a digestion in the market and profit booking. And that's what we are seeing in the Korean market right now. But don't forget that the fundamentals are still very strong. Some of these companies are not able to fulfill even 70% of the demand in the semi space. And if you look at the end customers, the monetization of the AI space is playing out. So as long as you have monetization of the AI infra space and demand-supply imbalance, it's quite likely that these stocks will recover. So we are still bullish on the Korean equity market, and I think this is only a mid-cycle digestion.
What does the selectivity within semis look like for your strategy?
Yeah, so looking at semis, we prefer first semi-equipments because there is shortage of equipment manufacturer, and given the capacity constraint, it's quite likely that this is going to last for a couple of years. So some of the players in Taiwan, some of the players in Europe, they have done extremely well. And we heard from a company last night as well that they raised the guidance because they are not able to fulfill the demand. Beyond that, foundries, I think, still look very good because the earnings growth for the next couple of years would be more than 30-40%. And it's going to be more high quality, not driven by the price momentum, but more driven by the volume growth. And then we have memory players in the Korean space. I think they will also do well in the next 6 months or so.
I wanted to get your views on these F4 conversations that are taking place. We've heard that the president is to receive briefings from some of these government officers as well, and we've heard from really the top leaders commenting on the market volatility. Does this level of oversight concern you in terms of whether we could see actually more extended periods of volatility as we're seeing in today's session?
I think it's quite likely that markets will remain volatile because the easy money in the market has been made. The first half, equity markets went higher despite all the concerns about the energy crisis and also the AI capex. From here, I think the gains will be more difficult. So all these are headlines, definitely not good for the market perspective, but as long as the earnings hold, then market will go higher. And for global equities, we are still expecting markets to go higher because earnings will be up more than 20% this year.
We've talked at length about the opportunities in Korea, and they're pretty well viewed at the moment. Are there other geographic markets for the AI tech theme that perhaps present better opportunities in terms of value? China or Japan, for example?
Yeah, if you look at the Asian markets, pretty much all the markets, I would say, they offer AI opportunities. Japan is a classic case, and now we are seeing that momentum in China as well. So if you look at the onshore market in China, the hardware stocks have been doing extremely well because China is going to spend $300 billion over the next 5 years to build its own AI ecosystem. And there will be no competition for those Chinese companies. So from a long-term perspective, the AI hardware stocks in China, I think they can do extremely well. At the same time, in the short term, the internet players should recover because valuations are very cheap and they are able to monetize the AI investment into their existing operations. Some of these stocks are trading at 13, 14 times in terms of the price to earning ratio. So look beyond Korea, look at the other markets, Japan, China. I think they offer fantastic opportunity from an AI perspective.
Suresh, we have to leave it there. We'll appreciate your time with us. Suresh Tantia, Head CIO of Asia Equity Strategy at UBS Global Wealth Management. More ahead here on the Asia Trade. This is Bloomberg.
We're seeing gold prices pretty steady as we got cooler U.S. inflation data, not just CPI yesterday, but PPI in the overnight session as well. But of course, the variable right now is what happens to oil prices, given that we continue to see the U.S.-Iran negotiations ongoing, the U.S. continuing its airstrikes. We just heard from the IEA head, Fatih, Birol, saying that this could escalate into a crisis unless we open up the Strait of Hormuz. But inflation expectations, not to mention the price of oil, very important for South Korea, very reliant, of course, on Middle Eastern imports, but also the fact that inflation is now at the fastest level in about 2 months. We continue to see the volatility when it comes to asset prices around Korea. On the day when we are getting the BOK rate decision, all expectations for a hike at the moment. As I mentioned earlier, inflation at the fastest in 2 years, above that 3% level for CPI, and of course, growth being boosted by the semiconductor trade as well. This is Bloomberg.
Pretty challenging day for equity investors here in Asia, really led by greater volatility again in the Kospi. Having said that, we are seeing that loss really being held at just over that 5% level. Fresh selling in semiconductor stocks, renewing concerns over how sustainable this AI and chip-related trade is. That broader MSCI Asia gauge dropping. We're seeing lesser losses, but still 2.7% lower when it comes to Japanese stocks at the moment. We also have the BOK decision at some point this hour to contend with, but it really is this potential regulatory action that we could see when it comes to the single stock leveraged ETFs, which have really been the big contributor when it comes to some of the volatility and rotations that we've seen, increasingly so out of these Korean markets. So that's why we are seeing that big drag for the Kospi at the moment, waiting for that announcement. At the same time, though, that energy trade continues, oil climbing for a fourth consecutive day. We're seeing Australian energy stocks again benefiting. But it is really about where to in terms of the next catalyst for this AI and chip-related trade, right? Markets closely now watching out for earnings from two of Nvidia's key suppliers in the region. TSMC set to report later on Thursday, and our Chief North Asia correspondent Stephen Engel joins us now from Taipei. What are we looking out for in terms of these numbers today, Steve?
Yeah, absolutely pivotal week that global investors are looking at to see if the spending patterns in AI are sustainable. ASML was the first one overnight. Obviously, the numbers were pretty good. It raised its net profit, raised its full-year net sales guidance, I should say, for a second time already this year. And, you know, it was a fairly tepid response, as you mentioned there at the top, Haidi, as chip stocks fell again. So attention sort of turns now to TSMC, top client of ASML. One of the guidances that ASML gave was that they're looking at adding 30% capacity to making those EUV, you know, extreme ultraviolet lithography machines next year, and is even open, given the amount of demand, for another 30% in 2028. That would bring the number of machines up to 110, and that is something ASML CFO talked about, that they're going to have to significantly investigate that, because the client signals for demand indicate that they could possibly absorb that and get that capacity up. So again, it raises the question as it links to TSMC, because the information, for one, the news outlet is saying that ASML is looking at possibly raising prices on its, you know, high-end lithography equipment, which is something that we would widely assume that TSMC, as its biggest client, would have some pushback on, and indications are that they would push back on that. So there's lots to dig into, obviously, with TSMC coming out with its results later, and then also executive guidance. And then we have an interview as well with the CFO of TSMC tomorrow.
With that ASML outlook, could we actually see TSMC increasing spending beyond the previous guidance?
Yeah, that's what we're really going to be looking for, because previous guidance was for, you know, outlays of upwards of $56 billion this year. And, you know, UBS, for one, is saying that number could be upwards of $60 billion. So any kind of firm outlook change would be something that we'll be looking at. I mean, revenue has been doing well. We had those second quarter numbers. Essentially, the June numbers were up 68%. And we can equate that for the second quarter of a jump of 36%. But again, the stock has not necessarily responded that greatly to those numbers, even though a 68% jump. Maybe it's the expectations for this is a little bit too high. So we'll have to look deeper into that as well. So BIA's take, Bloomberg Intelligence, June sales reinforce our view that AI and server processor demand will comfortably offset smartphone and PC weakness, strengthening the case for price increases that should lift gross margins outlook above the consensus of 67.1%, or even to the upper end of that outlook of 67.5% for those gross margins.
Our Chief North Asia correspondent Stephen Engel there joining us from Taipei. And of course, he'll bring you that conversation with the TSMC CFO Wendell Huang here on Monday. Apple shares climbed overnight after receiving long-awaited government approvals to roll out Apple Intelligence in China. On Wednesday, China's Cyberspace Administration included Apple's generative AI on a list of newly approved providers. Let's bring in Bloomberg Intelligence senior consumer and technology analyst Catherine Lim. And Catherine, Apple partnering up with Alibaba. How consequential is this?
Well, do you know what? The tied-up has been announced, I think, about 2 years ago. And really what is important here is that Beijing is now effectively certifying, the partnership, Alibaba's Quinn in particular, as an infrastructure-grade AI platform that literally it is safe, controllable, compliant for mass market use. So for a foreign player like Alibaba to operate generative AI in China, it does need a local partner that regulators can trust, and Alibaba is now the gatekeeper on the on-device side of things. But the reality is that it doesn't really quite change Alibaba's earnings profile in the near term. But the way we see it is that, it does upgrade its status in the AI hierarchy, again, from an e-commerce-led internet company to one of the core platforms that global and domestic players can plug into when they want to scale AI in China.
Tell us a little bit more about Alibaba's Quinn. I mean, how skillful is it? And what does this mean when it comes to the partnership, not just reputation-wise, for Apple?
Right. I think the race is still on in terms of, China AI and who is going to stand out, in this entire development. But I think one thing to actually note is that, China's AI race has two tracks. So one of it would really be, hardware-centric ecosystem. And we're really talking about Huawei, Xiaomi here, and cloud-based AI services from Baidu, or embedding their own models tightly into devices and apps. And then on the other side, again, that's where Alibaba comes in as an emerging infrastructure provider that foreign platforms like Apple, for instance, can depend on to be compliant and localized. So if we look at it together, the Apple deal doesn't quite knock off Huawei or Xiaomi off, their perch in smartphones. They will still lead on integrated device plus AI. What, again, I will stress is that it does confirm from this approval that regulatory trust and government is actually quite critical in China, together with the raw model performance. So essentially in that dimensions, Alibaba has just been formally recognized as a partner that can keep global AI within, China's guardrails.
Bloomberg Intelligence senior consumer and technology analyst Catherine Lim there. Well, Samsung, SK Hynix, Micron have been enjoying their dominant position in the global DRAM and high bandwidth chip market. But our Bloomberg Opinion columnist Shery warns that China's TSMC is starting to look like an upstart that could disrupt their joyride. Shery joins us now with more. So should these dominant players be worried?
I think so. I mean, at this point, CXMT, it has the momentum. It has been grabbing market share from the big three, doubling its market share to 8% from just 4% a year ago. And in addition, CXMT is seeking a Shanghai IPO with the hope of raising $10 billion. And $10 billion is a lot of money in China. We know Chinese factories, they build up very fast. And the CXMT is not shy about its plans to use those proceeds. It's going to double capacity. And that is a problem for the big three because the big three are already expanding their capacity. So now the question is whether the DRAM market is going to flip into an oversupply within the next year or so.
And what about high-end HBM chips?
So the industry consensus is that CXMT is trying with HBM, and it's so far at the engineering stage, but it's by no means ready to go at the commercial scale yet. And the CXMT is not going to be able to do anything until maybe 2028. Having said that, it's already able to mass produce the conventional DRAM, and that can hurt the big three's earnings substantially because it's the conventional DRAM's prices that are jumping in this year.
CXMT will start taking investor orders today. So what does this all mean in terms of reception for this IPO?
I think Chinese investors will love it. I mean, we have seen China's GDP numbers coming out yesterday. The economy is not doing very well, right? Literally, like semiconductor industry is the only game in town, and they will just love it.
Bloomberg Opinion columnist there with the latest, of course, on all of the semiconductor news, especially in the China space as we're getting perhaps more competition. The chief technology officer of Palantir sees Chinese AI models posing an economic risk to the U.S. This as concerns among top American AI companies grow over Chinese rivals improperly using a technique known as distillation. Shyam Sankar spoke to Bloomberg at the 2026 Pennsylvania Defense and Innovation Summit.
My view is that national security is not an end unto itself. It's a means to an end. And the actual end is American prosperity. And so I think it poses a threat to American prosperity. These Chinese open source models are really the result of distillation attacks. Most of this is just stolen American IP from Frontier Labs. And I think the Frontier Labs should do more to protect that IP, and that's in their own economic interest. But I'm less worried about it in the present moment because the gravest threat to us is not homicide, it's suicide. It's an inability to turn these tokens into economic value and generate American prosperity for it. You see that with the proposed moratorium in New York on data centers. Like, turning our back on AI would be as consequential a mistake as turning our back on the atom in the 70s. And we're starting to see a burgeoning, it's just the beginning, but a burgeoning U.S. open model ecosystem forming. Nvidia's Nemotron models are very good. I think you're going to see in the next month a slate of announcements of other American companies, non-Frontier Labs, sometimes called Neo Labs, who are putting out open weight models that companies are going to be able to cheaply fine-tune and capture their own alpha in weights they control.
In the final minute that I have you, part of the U.S.'s strategy when it comes to national security has been to have the government take equity stakes in companies that are deemed critical to national security. We know the idea has been floated when it comes to some of these Frontier Labs. I'm wondering what you make of this strategy. Is this the right way for the U.S. to go about it?
Well, I think it's very case dependent. I'm glad it's an option on the table. I think for some companies where they need a huge equity injection, it could make a lot of sense. For other companies, based on where they are in the mix of business they do between the commercial and government world, I'm not sure it makes as much sense. But I'm glad it's an option that's on the table. It should be a consideration.
Palantir CTO Shyam Sankar there speaking with Bloomberg's Tyler Kendall. More ahead here on the Asia Trade. This is Bloomberg.
We're seeing more downside on Korean assets. The Kospi now losing more than 6%. We'll be watching for any trading halts if this acceleration of losses continues. We're seeing the energy sector, one of the very few that's gaining ground today. Not surprising. Oil prices are higher today, both WTI and Brent around that $80 per barrel level, given the ongoing tensions between the U.S. and Iran. But the tech sell-off continues. The tech sector on the Kospi down more than 9% as we're seeing this volatility continuing the AI trade. Of course, the AI trade, inflation, oil prices, all of this very important for the Bank of Korea. Is decision day today. Credit Agricole expecting the Bank of Korea to raise rates unanimously by 25 basis points. Joining us now is their Korean economist, Yeon Kim. Yeon, we saw actually two dissenters in the previous May meeting, and they wanted an immediate hike. So does this mean everybody's on board, and why?
Sure. Thank you for having me. So today we think the BOK is expected to hike by 25 basis points, given that there is a lot of concerns around inflation. Indeed, the BOK has been signaling that it's likely to hike several times before, so the market is very well positioned for 25 basis point hike today.
Could we see back-to-back hikes?
In terms of back-to-back hike, we see a very low probability so far, given that the BOK is likely to wait a bit in order to see the impact of the July rate hike. Indeed, the oil price has come down a bit, though it rebounded recently, but compared to previously, the oil price is lower, and the government has been saying that it will do a lot of measures in order to stabilize the prices onshore Korea. And also there will be a bit more real estate policy measures in order to stabilize the housing prices. So the BOK will do a 25 basis point hike today and is likely to wait for a more impact to be monitored in August. And then we are expecting another hike in October.
So where do you see the terminal rate in this cycle?
In terms of the terminal rate, we are currently expecting to hike the July one and October one, so it's going to be 3%. But we note that there is still a risk of another hikes. So three hikes in total, given that the BOK is likely to focus on inflation. If the inflation stays very elevated above the BOK's 2% target, there is certainly risk for another rate hike next year.
Especially since Governor Shin has also highlighted the exchange rate volatility as an inflation risk, right? Given that we're seeing the volatility in the stock markets also affecting what's happening with the Korean won. How do you expect that to apply and really affect monetary policy when it comes to the market fluctuations?
So for the BOK, FX is more impacting the inflation. Because the BOK's primary goal is price stability, they look at the FX as the factor for inflation. For Korea's import inflation, it actually rose by 20% year on year, so which is a very big import inflation for Korea. So because the Korea won has depreciated, BOK is concerned about import price pushing the overall headline CPI inflation higher. So in terms of the effects impacting inflation, the BOK is definitely concerned.
And what about the fact that we're seeing more volatility in the equity space as well? When there's leveraged single stock products, we know that the government now is trying to see if there are some measures to really tame this volatility. The 24-hour won trading situation as well. When it comes to financial conditions in the country, is this something that the BOK considers?
In terms of the financial condition and financial stability, definitely the BOK will consider this volatility very cautiously. In terms of the FX level, they were previously concerned about dollar Korea going up higher with the 24-hour trading. However, with their cautious monitoring, with we see the dollar Korea moving down from its recent high from 1560 to now around 1480, 1490 level. So it was quite a decline. So it will give some comfort for the BOK. And the reason why we are seeing this decline is that first, the foreign investors have been net selling in Kospi. However, they've been moderating their net selling with the Kospi correcting. And secondly, Korean exporters such as SK Hynix, Hanwha Ocean are selling dollar. So these have been helping the dollar Korea to stabilize down.
We continue to see this exuberance around anything to do with artificial intelligence, right? How much will this actually help when it comes to the South Korean economy? Hold on your thought right now, because we are getting the Bank of Korea coming out with this policy decision. It's a hike to 2.75% from 2.5%, as expected by all economists surveyed by Bloomberg. We'll be talking right now with Yeon about the implications for the South Korean economy, given that we have inflation now accelerating at the fastest pace in more than 2 years. And of course, Yeon, give us your reaction to the very much anticipated rate hike that we're getting from the BOK. But as I was talking about the semiconductor boom, how much will the AI trade really help offset some of this tightening that we're seeing from the BOK as well?
Sure. So this rate hike in July was widely expected given the signal from the BOK. So the focus today with the press conference will be more on the BOK's forward guidance in terms of their timing of next hike and in terms of their terminal rate for this rate hike cycle. So we'll watch out for that during the press conference. And also regarding the AI cycle helping Korea, actually we are seeing a lot of support from AI and also chip export in Korea. Because of Korea's export growing by like 70% year on year in June, it has pushed Korea's growth potential really high. So though we are expecting Korea growth to be around 2.6%, we are considering to raise our forecast for the GDP. And market and Korea, Bank of Korea also hinted that they are going to raise their GDP forecast. So indeed, there is growth potential for not only export, but also consumption and government spending driven by this AI cycle.
Does that also help offset some of the concerns around the deepening of the K-shaped recovery, of household debt still being high, of we're seeing, of course, the apartment prices in Korea, for example, that not everybody can afford? Does the AI cycle and the boom help mitigate some of the fallout from the inequality that we're also seeing in that country?
Yeah, it will definitely help. Though it's more driven and focused in the tech sector, we are seeing that the government spending is helping to support the lower part of the K. For example, in April this year, Korean government did a supplementary budget to support the general people. So indeed, the impact of AI cycle is not only impacting the specific industry, but also supporting the general private consumption and government spending.
Yeon Kim, really good to have you with us, Korea economist at Credit Agricole, as we dissect that BOK rate hike decision today. This is Bloomberg.
It's all about Korea for a number of reasons, and it's on the way further down when it comes to the Kospi, dragging down the rest of Asian equities in this session, but we're seeing 6% decline there. This, as we expect, South Korea will soon be announcing measures regarding the controversy over these leveraged ETFs linked to single stocks like of Samsung, SK Hynix, for example, and their contribution to stock market volatility. We'll be hearing from the F4 regulators and Financial Services Commission, as well as the Finance Ministry and the Financial Supervisory Service as well. On top of that, we just had that BOK decision as well. unsurprisingly, raising rates on Thursday for the first time in more than 3 years. This AI-driven boom really helping fuel what is being perceived as sticky inflation levels, faster than expected growth there as well. So increasing that 7-day repo rate a quarter point, 2.75%. Subscribers can also get more on the terminal for more on that BOK decision. TLR Vigo is where you're at. Get that commentary and reaction from our team now. This is Bloomberg.